The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Just want to start off the day by saying thank you to all of you for joining me on this webinar today. We're going to be looking at a couple different increasing income options on some annuities. I will apologize in advance for my voice. I've been fighting some illness the last couple weeks on the mend, but just bear with me on that one today. For those of you who don't know me, my name's Laura Johnson. I work here at IAMS in the annuity department. So anytime you need help with any case design, illustrations, anything like that, feel free to give me a call. I'm happy to help you out. Today we're going to look at a couple different annuities that have increasing income options. I feel like this is an area in the industry that's growing. We're seeing more and more products being introduced on the every month, and a lot of them are adopting this increasing income kind of concept. So we're going to dive in, look at 3 different products today. I'm going to go through these first slides pretty quickly. Since I am going to be covering 3 different products in a pretty short time today, I just ask that you guys all jot down your questions, and then I will follow up with each of you later on today and answer those for you. Also, there are going to be a couple poll questions that we're going to throw up. Quicker you answer those, the quicker we can move forward. So we'll go ahead and get started. I'm going to start off today by talking about a couple different incentive programs we've got available here at IAMS. The first one you're going to have available if you're new to IAMS, just considering joining IAMS, or just recently joined us, you're still have this available for you. It's our new producer bonus. This is available for you. In the first 6 months, you can qualify for this. As you can see on the screen, we have 3 different tiers. We've got $100,000, $300,000, and $500,000 levels. You can choose to cash out at any point in time or go for the higher level. So if you decide, you write a $100,000 case, you can cash out your new producer bonus with one of those options. Or if you're ambitious, want to go for $300,000 or that $500,000 level, as you can see, there's some great marketing options and marketing reimbursement, cash options available for you. So really great way. We really think this is a good way to help you guys with those first cases you write with IAMS to put some money back in your pocket for marketing or help put together some marketing strategies, whether it be seminars or some direct mail pieces, maybe some Facebook advertising, put together some marketing stuff to help you get going. Again, this is for the first 180 days, so 6 months. And it is, once you're cashed out with this, then we move you into a marketing reimbursement program, which I'm going to be talking about. One thing I will mention with the new producer bonus, controlled business does not count on it. So any family, friends, or family members and stuff, that would not count for new producer bonus. Once you're done with your new producer bonus, we move you into a marketing reimbursement program. So for every $100,000 of indexed annuity premium you write, we're going to put $100 in a marketing account for you. For every $100,000 of single premium life business you do, we'll put $200 in an account, marketing account for you. And for every $10,000 of life target premium you do, we'll slide some money in, $200 of marketing reimbursement dollars into your account for you as well. So just a great way for us to say thank you for the business and help partner with you on those expenses. If you're ever curious where you stand with marketing dollars, feel free to email accounting@imsinc.com. Request your balance, they'll get it out to you. Another incentive program we do have available, as you all know, your business is built on referrals, and so is ours. So if you enjoying the services that you're receiving from IAMS, and you want to refer an agent over to us, $50 when that agent gets contracted, $100 when they write their first piece of business, and then going forward, we're going to pay you a 20 basis point override on all the business that they write. So just a way for us to say thank you for those referrals, put some money back in your pocket without you having to take on the responsibility of building a hierarchy and taking on the liability of other agents as well. So just a good way for us to say thank you. Those checks are paid out quarterly, so we don't pay them out daily. But again, those are Steve Charles's favorite checks to signs are ones that are from referrals. Here at IAMS, as part of our name insurance agency marketing service, we really are not striving to be the biggest FMO in the industry. We're trying to be #1 when it comes to service. And that starts with our back office support. From the time you're working on a case, working with the marketing team, your marketer on case design, we're going to help make sure you got all your trainings compliant before you go out and write a piece of business. Make sure you got the right forms. And then when you do write a piece of business, if you send it to our office, Amber and her team will scrub the application for you. And then the ladies in new business will follow up on that business every 3 to 5 business days for you, making sure it's getting through suitability, making sure it's getting through the channels at the proper speeds, and trying to keep things moving for you. The goal with that is that a lot of you are independent agents who don't have maybe a secretary, so if we can help with some of that back office stuff, that's really the goal there. Same thing on the life side, annuity side, both sides. We've got case managers that are going to help on the life side with ordering your parameds to chasing down doctor's records. We're going to be able to assist with all that. We did just recently switch our contracting platform to AssurancePay, so we are up and running now with AssurancePay. Makes it super easy to add contracts, take them away, whatever you'd like to do. We are able to do that on a paperless system, so really excited about that transition. So if you're looking to get appointed with IAMS, it's, fill out paperwork, get set up on AssurancePay, and you can add carriers at any time. If you haven't talked with our creative department, I think this is one of the #1 departments out in our office for you. When I talk to agents all the time, they're asking me if I ask them what they need help with, it's getting in front of people. Well, the creative team, Jacob, Sean, Aaron, do a great job for our advisors. Maybe you don't even have a business card or a logo design yet. We can do that for free if you're active in writing business with us. Then anything we do for you, we can apply that logo and that color scheme to everything we do, whether it be a newsletter or maybe you want to do some social media marketing or email marketing, looking for a website. Those are all things that the creative department can assist you with. So if you have anything you're working on that maybe you need some design help with, they could probably be of assistance to you for a fraction of the price. Or, if it's something pretty simple, we could probably get it done with no cost. So if you have something you're working on and need some help, give Sean or Jacob a call. They'd be happy to help you out with that. If you haven't been out to our website, as you can see on the screen, it's www.imsinc.com. A lot of great things out on our website. I'm not going to go through all of it, but a few things I will mention is we just recently did add a single sign-on platform to our website for Firelight. So for you all who are enjoying the ease of e-apps, it's the way our industry is going to be headed. Before long, it's going to be the only way to submit apps, I have a feeling. So with Firelight, it's a really simple way just to go out to IAMS's website and be able to do an application online. Pretty simple platform as well. So if you're looking to get set up on that, give Amber Williams or Cynthia Bodker in my office a call. They'll get you set up as a single sign-on for Firelight through our website, and you'll be able to do all your applications right there in one spot. A couple other things that I really like on our website, if you're a big annuity producer, if you go under the products tab and go to annuities, you will actually have access to Annuity Rate Watch through our website, which is great. Also on the life side, we've got iPipeline lined up for quoting. So doing some term or IUL quotes, you can go out there, run your own quotes on our website for both annuity and life. So some really great things out there. One of my favorite things on our website is under the support tab. There's a sales resource library. This is a library full of tools for you all in the field. Anywhere from specific fact finders. I had a guy looking for working on an estate case. We have an estate out in the resource library. There's about 3 or 4 different fact finders just based on estate planning. So maybe you've got someone also talking to a client, and they say, what's a fixed indexed annuity? Well, out on the sales resource library, there's a whole file full of different topics that are client approved presentations that break down what an indexed annuity is, what is a stretch IRA, what is a hybrid long-term care and annuity product. I mean, some great resources that are client approved out there, as well as many financial calculators and other marketing tools for you as well. So if you have any trouble, haven't been out to our website, want a quick guide through it, give myself or any of the marketers here at IAMS a call, and we can guide you through that. We do also have an RIA in this office. IAMS Wealth Management was started about just over 2 years ago now. Charles Jr., Mike Hansen, Joan do a great job for our advisors. When we built the RIA, it was around the time where the DOL was hanging over our head, even though that's kind of gone away for now. It's not dead and gone for good. So we thought it was a time to enter this part of the industry as well. So like I said, we do have an RIA. If you've got your 65 CFP, get registered with IAMS. We do clear through TD Ameritrade. Got over like 9 or 10 different money managers to choose from. Back office is Fusion Capital Management down in Texas. Just some really great things happening over on that end. For those people who maybe never really wanted to enter the security market, but know that our industry is kind of going that way, If you're studying for your exam or still considering if you want to get your exam, depending on the state you live in, we do have a soliciting program available for you. And again, depending on the state you live in, we can actually kick back a portion of the fee for those referrals that you refer over to IAMS Wealth Management. So the nice thing about that, we've had a lot of agents as they're studying for their exams just refer clients over. We manage those for the client, for the agents, and when they do pass their exam, we sign all those clients right over to that agent. So good way to start building a book while you're studying for your exam, or maybe you're just not interested in taking your 65. This is a great option to maybe get a little kickback. I always tell my advisors, agents, when I'm talking with them, you go into a household, client has 500,000. Well, as you all know, an annuity carrier is not going to take all 500,000 of the client's net worth and let you put it into an annuity. Maybe they're only going to take 350,000. So, as an advisor agent, what are you doing with that other 150,000? Because if you're not doing something with it, you're just allowing another advisor to come in and potentially steal your client. So, we really feel like between our advisors that are with wealth management and this listing program, we can really help our agents in that area. So if you are interested in IAMS Wealth Management and the platform or the soliciting program, just go ahead and answer yes to the question, and that'll generate a phone call from Mike Hansen in our office or Charles Jr. They can get any questions answered regarding, again, the soliciting program and or just our platform in general. So if you could get those questions answered real quickly, we can move on to the next slide. Alrighty. Again, the sooner we answer these questions, the sooner we get to move on. All right, so next we're going to talk about our life and annuity academies. I think this is one of the things that IAMS has really excelled in over the last, as long as I've been with the company, and I've been here for well over 10 years. We've been putting these on. We do them about quarterly, 3 to 4 of them a year. What we do is we partner either with a home office or do them here in our office. But it's a 2.5-day training, and it's not just annuities 101. It's not life insurance 101. This is in-depth sales concepts, techniques. How can we help you grow your business? You're having some success but looking to grow. This is the perfect thing for you. We bring in several of our top producers who have been in the industry, have struggled to get to the top, and they're going to share their exact marketing programs with you, exactly their seminars, the radio shows they're doing. They're going to show exactly what they're doing to get in front of clients, and their goal is to help you guys succeed as well. The nice thing about working with IAMS, if you haven't been with us for very long or just join us, you'll learn that it's very family oriented. We're the producers that work with IAMS, we just consider them like family, and that includes them coming out to help teach you guys things as well. So with these academies, it's not for someone who's new to the business, not someone who's looking for the basics on life insurance, because a lot of the concepts are much more in depth and really looking at advanced tools and marketing ideas. So it's really great. I think it's really worth the time. It is all expense paid. We do pay for all the expenses as far as meals, travel, hotel, all that is included. Like I say, we usually do partner with one of the home offices. Just a couple weeks ago we were up at Athene for doing one at their office. It was a great meeting, had about 40 advisors up there. And it was a really great time. So the goal there is to send you back with a lot of ideas and get you pumped up with some new marketing concepts that can help you grow your business. So if you are interested in attending one of our life and annuity academies, go ahead and answer yes to the question. We don't have the dates on the calendar for the next one. I will tell you it'll be after the first of the year. For some reason, people don't really like to come out to Omaha or Des Moines to visit us in the middle of winter. So next one I will say will probably be late February, early March. It'll either be here in Omaha, up in Des Moines, or we might be doing it at a different location as well. Last year we did one down in Dallas. So some great opportunities though. So if you are interested, just go ahead and answer yes. We'll send you a pre-registration link following the webinar that will let us know you're interested. And then when we get the dates for the next one, we'll be able to get that out to you. Couple trips I want to tell you about. First of all, we did just announce the IAMS and Athene Marketing Summit for 2020. Qualification did just begin in July, so we just got going. We'll run through June of next year. We'll get you and a guest down to the Montage in Cabo. for several days, the 6th through the 29th. All expense paid. It's just a great trip that our Athene has partnered with us on to offer exclusively to IAMS agents. So we're lucky enough to have that partnership with Athene that they'll put one of these trips on with us. So we're really excited about it. The best part about this is the qualification just began. Not only for this trip, but for our 2021 trip as well. We do an 18-month qualification. We haven't announced the location yet, but I can tell you it is better than any other ones we've been to before. So we'll be announcing that in the coming weeks. But the great news is that all your Athene production will count for Montage, but that production will also count for our trip as well. So all your production can count for 2 different trips. One being late next year, the following will be in the spring of 2021. So again, I just mentioned it, qualification period is 18 months for the IAMS top producers trip. Again, we will be announcing the location here in the coming weeks. I can tell you it'll include lots of good food, lots of good fellowship, lots of good golf, and some spa time, relaxation in a specific location that'll be coming soon. So we're really excited about both of these trips. If you have any questions where you stand, just give your marketer at IAMS a call. So today we're going to look at a couple different increasing income options on some annuities. For those of you who've just recently joined me, I do apologize again for my voice. I'm going to try and make it through this without coughing too much, but I appreciate your patience. Why we're talking about this today, we're looking at giving the clients some better opportunities for income. We're going to try and help clients keep up with some inflation. Often I'm talking to clients of my own. What are your main goals in retirement? They don't want to run out of money and they want to keep up with inflation. So with these products we're going to look at today, we'll be able to satisfy both of those needs. Also, like I mentioned at the beginning, there are more and more carriers adopting this concept. So the sooner you jump on that bandwagon, the better, because I feel like this is part of the future of what income riders are going to look like in the industry. What the client can expect from these products that we're going to be looking at, the opportunity to have some increasing income, the power to retain control over their assets while receiving income, as well as have one income that lasts as long as their retirement does, so something they're not going to outlive. I'm going to talk real quickly about the power to retain control over your assets. All the products we're going to look at today will have a time and a place where they fit best, but a lot of times when we're looking at these, clients are looking for income immediately. I get a lot of calls from agents saying I need a SPIA quote, single premium immediate quote. My client needs income now. The good news is that we've got products now in the industry, in the FIA business, fixed index annuity business, that allow your clients to get income 30 days after issue. But not only that, but give them the opportunity to have increasing income and at the same time complete control of their money. When you sign for a SPIA, you're signing a dotted line. You're signing your destiny. It is what it is. It's not going to change. Same thing with annuitizing a contract. It is what it is, and it's not going to change. With the concepts we're going to be looking at today, we're putting all that control in your client's lap, giving them a future income that could increase, but also giving them that complete control with the indexed annuity, meaning that they want to take an extra $5,000 out of their contract to take all the grandkids to Disney. They have the capability to do that. They don't want the full amount of income. They want to let it grow a little longer. They have the potential to do that. We're giving that control to your clients, and I think that's really important concept to understand. Why we're talking about this, I feel like inflation is a consistent problem. I mean, I remember, now I'm way younger than probably some of you, but when I was a little girl, Grandpa taking me out and going to get gas, and gas was under $1. And now we look at it today, we're paying several dollars a gallon. You know, we look at milk. What was milk a couple of years ago and what is it today? It's going to continue to be a problem. It's not going anywhere. And that's why we're looking at the products we are today. So with that, we're going to talk about 3 different products today. The first one we're going to talk about is the Athene Ascent Pro bonus product. Now with this product, there are lots of options, ways to work with the product. We're going to focus really on the increasing income. With this product, you do have the capability of taking income 30 days after issue. It does work for both qualified and non-qualified funds, and it does allow for both single and joint payout for both qualified and non-qualified money. I will mention on that, a lot of people question me on that qualified and a joint payout. With that, the way we set that up, as you all know, money has to move like to like. But what a lot of the carriers will allow you to do is put the spouse as the primary beneficiary, and when you elect to turn on that income, you'll have the option of a single or joint payout. If the spouse is the primary beneficiary, they will allow for that to be a joint payout. The rider fee on this product is 1%. Minimum premium $10,000 and can be written issue ages 35 to age 80. With Athene, you get two choices. First, you're going to have to pick how the money grows. Like I said, we're going to really focus on the multiplier concept. So they do have option 1, which gives you a 10% bonus and grows at 10% simple for 10 years, 5% simple years 11 through 20. And then they've got a guaranteed with a multiplier, which we'll be looking at today. After you pick how it grows, when you go to activate the income, you then get another choice. How are you going to have it pay out? Do you want a level payout that's going to stay the same forever? Do you want an earnings index, which we're going to dive into here in a little bit, and they've also got an inflation adjusted option as well. With Athene, we've got a lot of different great options for indexes. They've got relationships with both traditional S&P 500 strategies as well as some risk control ones. They've got a relationship with the BNP Paribas, Morningstar, and the SG Janus funds. So some really competitive indexes that we've got the capability of using in this product. Like I said, option 1, we're really not going to focus on. We're going to look at that option number 2. With this, you're going to get a 7% guaranteed simple roll-up, no matter what, as well as 200% participation. Meaning that, let's just say, for example, in year 1, client earned, we're deferring at this point. We have not activated income. Let's just say that we earn 4%. Okay. So you got 400% times 200% participation, which is going to be 8%. Plus you got your 7% guaranteed in there as well. In that example, off of a 4% interest in year 1, we would have had a 15% gain on the benefit base. Again, that 4% times 200% participation gives us the 8 plus the 7, a 15% simple roll-up in year 1. It's a great opportunity off of I feel like a pretty conservative index or, interest. As you can see on the screen, that option 1 is going to start. If you look over at the very beginning of the graph, this little yellow over here, we're going to start a little bit higher than we would be because the payout percentages, which we're going to talk a lot about today, are a little lower when you're looking at these non-guaranteed options. But this guaranteed yellow, it starts a little bit higher, and as you can see, it's just a straight line up. The benefit base hypothetically getting up to 210. What we're looking at with this option 2 is giving them the potential when they earn interest to see some really nice increases. So again, as you can see, the guaranteed on that is a little bit lower due to payout percentages being less. But what's really exciting is look at the dotted lines above. Even in the worst case scenario over that 10-year period, we, in the worst case scenario, grew that benefit base to 271,000 instead of 210 or 186. So really had the great opportunity with, like I said, in worst case scenarios, probably 2 or 3% interest, we got them up to that percent or that number in 10 years. One thing to keep in mind, option 1, that one we're not really talking about, that is 10% simple, does have a 10% income-based bonus. With option 2 that we're looking at today, it does only have a 5% bonus on the benefit base. So a little bit smaller bonus, but a lot of potential with the product. Like I mentioned, all these products today are going to have a time and a place where I think they fit in. Where I think that Athene really shines is when we're looking to defer. We're not looking for that income today, but we're looking for it maybe 3, 5, 6, 7 years down the line. But we still want to have the potential to have increasing income. Those are the times where I think they're really going to shine because, as you all know, we're probably not going to earn interest every single year. But, 7 out of the 10 years we probably will. So in those cases, being able to really bump that benefit base with that 200% participation will be huge. So first, you get to pick option 1 or 2, how we grow. Now we're going to look at the 3 payout options. We got the level payout. I always say it is what it is. This is what you're going to get. It's never going to change. It's never going up. It's never going down. Unless you go outside of the take extra money, it's not going to change. We don't really want to talk about that one today. What my excitement comes to is when we're looking at the earnings index. This gives the opportunity for the client to have increasing income. So every time they earn interest, they would see an increase in their income. Like I said, and I will say this multiple times, payout percentages are very, very important with this product. If you choose the earnings index or the inflation adjusted, your payout percentage will be lower than the level payout. So you are going to start a little bit lower, but look at the potential. We have the potential to help your clients keep up with inflation. Worst case scenario, I mean, we're starting at $82.95 over a 10-year period, growing that income. Worst case scenario to 11 grand. So really some great opportunities here. Again, 4% interest equals 4% increase. As you can see, there's some straight dotted lines here too. So it looks like at age 68, there wasn't any interest earned, from 67 to 68. So it just stayed the same. Once your client's income goes up, it will never come back down. So that's a pretty exciting thing. The third option with Athene is the inflation adjusted. We see this one used very rarely. Again, it's due to the payout percentages. Obviously, with inflation, you're always going to see increases, or you should, the way that the history is performed. But you are starting with a very, very low payout percentage. You have a very low payout percentage. But again, each time that CPIU goes up, you're going to see an increase in your income as well. I'm going to just show an illustration. I use the earnings index option on this one. So of course I have to show you the assumed rate at 0 first. Hypothetically speaking, putting 500,000 in, we get that little bit of a bonus. And then we have a 7% simple that was guaranteed. So that's really all that's showing in this part of the illustration. Hypothetically speaking, 0 interest, we're going to guarantee $26,950. Now, the exciting part is when we add just a little bit of interest. And again, I illustrated these very conservatively. This is under 4% illustrated. But even with a 4% return or just under that, look at the potential we have to grow that benefit base over time. Again, then once we activate income, we're looking at $33,000 hypothetically. But the exciting part is what happens after that. Every time the client earns interest thereafter, you're going to see this income value continue to rise, continue to go up. Even once cash accounts been depleted, that income is still increasing. That's what we're talking about. That's giving your clients the opportunity to have a fun retirement, be able to spoil the grandkids, being able to take a few extra trips, whatever it might be, not stress. That's the key, not stressing over it. I think this is a really great opportunity. Here are the payout percentages for Athene. Like I mentioned, there's different payout percentages for both level, increase, the earnings index, and the inflation adjusted. These are very, very important. They don't look too attractive right now. Athene kind of put the brakes on for the year. Just recently with the interest rate environment being where it's at, we've really seen them kind of take a back seat in some areas. So their payout percentages are not super competitive right now, but that doesn't mean there's not great opportunities here. Second product we're going to talk about today is AIG Multiplier. This is probably one of my favorites when it comes to increasing income. The reason being payout percentages. And we'll get into this a little bit more as we go through this product, but the advantage that AIG gives you is that they have the same payout percentages for their guaranteed income rider as they do their participating income, the multiplier. It's the same payout percentages regardless of the rider. So that gives them a huge advantage over anyone else in the industry. With this product, you can take income as early as 30 days after issue. Again, qualified and non-qualified for single and joint, just like Athene. Rider fee on this is 1.1%. Minimum on this product is a little bit higher. It is $25,000. And the issue ages, that should say 50 to 78, but for some reason it says 0. It is 50 to 78 as far as issue ages go. The way this product works, there's a couple ways. They rolled out the product using the word multiplier. For some reason, the industry can't get that concept down completely, so made it a little simpler. But basically, the way the product works is during deferral, we're going to double any interest you earn. So 4% interest equals an 8% income credit that year. And then once you turn on income, we're going to match it. So here's another example. They just rebranded it using the double and match words. So during deferral, we're going to double interest, and that's what the benefit base will grow by. Once you activate income, match it. So 4% interest, we'll just say 100,000. For the example I'm going to use, let's just say the client's 65 years old and the payout percentage at age 65 with AIG is 5.25. So let's just say $100,000, and we're going to start income right away. So their income, day one, if we 100,000 started income at 5.25 at 65, we're going to guarantee them $5,250 every year, right? Okay. In the first year, we're going to earn 4% interest. So what AIG is going to do is they're going to credit that interest also to the benefit base. So now instead of getting 5.25 off of 100,000, you're now going to get 5.25 off 104,000. So that's going to take your income from being 5250 to being 5460. You know, we're growing it by a couple $100. So every time that interest is earned, you're going to have the same payout percentage just off of a higher dollar amount. So again, we double during deferral. Once we activate income, we're going to match it. So let's look at some illustrations. Actually, first I'm going to show you this slide. This is probably my favorite slide if we're going to go talk to clients and try and explain this concept. I think the number one reason why we don't see increasing income written is because agents don't want to have to explain it to clients. It's not the easiest concept for us to understand, let alone an 80-year-old client or 75-year-old client. So I think this really helps paint the picture of how the whole thing works. Okay. So in this example, 62-year-old, in year one, we earn 3% interest. At this point, if you can see on the screen, this lighter gray area is during deferral. And then here at age 67, we turn on the income. And we'll talk about that here in a minute. So we're in the deferring stages. 3% interest earned in the first year. You get a 6% bump on the benefit base. The next year, we earn 0. So we stayed the same. Next year, 4, we got 8. Onward, we see here 6%, we got a 12% bump. Okay, at age 67, we decide to turn on income. I will mention this little purple line here is the cash value. It's part of the story, so keep that in mind. So we turn on income at age 67. We earn 4% interest. Look at, we got a 4% bump in our income. 0, we stayed the same. Our income never goes down. Then the next time we earn interest, we got 5%. We went up. As you can see, those increases, we continue to raise income. Till this cash account hit 0. So from 67 to 81, 14 years later, we have no more cash in the account. With AIG, once the cash account hits 0, your income is going to be locked in, and that is your new income for the rest of your life. So we're giving the client the opportunity not only to have a competitive income, because we have good payout percentages, but we have given them the opportunity to have these increases for 12 to 15 years after they start income. And I think that this picture just helps explain all aspects of the product because it's a lot of moving parts, and a lot of times, you know, we shy away from the confusing ones so we don't lose the sale. But if we have a nice picture to help paint it, I think that will helps with me at least. With AIG, we've got a lot of different strategies available as well. They've got S&P. They actually just added a Russell 2000 strategy. They've also got a relationship with the Merrill Lynch Strategic Balance Index. I will tell you, as of yesterday, the Merrill Lynch was up over 14% year to date, so looking really strong right there. So that's a great option. It's an uncapped strategy, very low spreads on that product or on that strategy. So some really great uncapped opportunities there. I had a client the other day, or an agent the other day, I was going through a statement. Client was using the multiplier. The client earned like 12.5% interest. Well, you multiply that times 2 because we're in deferral. Clients all over 24% increase on their benefit base. Huge increase. And they're going to turn on income this year, and that client was very happy. Also, they've got a unique strategy with PIMCO. A lot of times when I say PIMCO, people think bonds. With this, it's not. It's a global optima index. It's a combination of international markets, emerging markets, and then it's got U.S. mid, small, and large cap in there as well. So it's a very good blend. And what's unique about it is a total return index. You know, most of the indexes in the industry are price return. It goes back to the purchase price, what the options. With the PIMCO one, it's a total return. So you're earning those dividends over time as well. So a really great option there as well. So again, some great strategies there. Here's the exciting part when we look at an illustration. Like I said, all these products have a time and a place, a theme. If you're looking to defer a couple of years with that 7% plus 200 participation looks really good during deferral. Where I think AIG really shines is for those clients who need income and need it in the first year or two. So in this example, I used a 70-year-old taking income immediately. So we put 500,000 in. Again, I have to illustrate the zeros. So we can guarantee that the client's going to get $30,000 no matter what. Here's the exciting part. And I, again, illustrated this pretty conservatively. I will say a lot of people, when they look at this interest credited rate, come down here and like, oh my, less than 3%? No way. Well, let me just remind you that in years 15 to 25, they were all zeros. So when you take away 10 of those zeros and average it out, we're looking at more of like a 4% return. But here's how the product works. So we start with 500,000. The first year we earn 1.69% interest. The benefit base went up by 1.69%. You can pull out your calculator right now and do it. You do 500,000 times 1.69. I'm going to guess that you're going to get somewhere around $8,450. And as you can see, the benefit base went up by that amount as well. So the client's going to get the exact same payout percentage. Say it's 6%, which it is. The client is now, instead of going to get 6% of 500,000, they're going to get 6% of $508,450, which gave them a $500 increase in their income. Okay, the next year, the reason why every other year you'll see a little bit more interest earned is probably because, well, I know for a fact it's because I illustrated some to the 2-year strategies, which are more competitive. So in year 2, we earned 13.74%. Remember how I just mentioned how my client, I just saw a statement literally days ago, where it's 12.5%? Look at the kind of bump that did in this income. Took it from $30,000 to almost, well, 34.5, 34.6. That's a huge increase in the income. $4,000 divided by 12, it's a nice pay raise each month. So again, the potential with this product is huge. And we can give your client $30,000 for the rest of their life, or we can give them the potential to have this kind of growth. Again, this one grew for 13 years, 14 years. Once this cash account hits zero, it locks in at the highest income. This is the client's highest income for the rest of this is their income now for the rest of their life. So really giving them that opportunity to keep up with inflation, enjoy retirement, not stress about paying bills, not stress about taking a vacation, but really give them some great income opportunities. So again, I really think that AIG shines when it comes to that immediate need. Will they look good if we defer 1 year? They will not pop up in the top 10 on Annuity Rate Watch. But I ran one the other day where it's about, I think it was like $1,100, I think is what the difference was between the guaranteed income and the multiplier after 1 year deferral. Well, that's like $95 a month. I think I'd take the potential of giving up $95 a month to have the potential to grow my income the way this product could. So just looking at the concept behind it is really important as well. Here, the payout percentage, like I said, well, here it shows 2 sets, but that's because it shows the single and the joint. But the nice thing, like I said, is these payout percentages are the same for their guaranteed product and this product. So it's actually one product in the same. It's just at time of application, you get a pick if you want their guaranteed rider or if you want the multiplier. So really great opportunities. If you have cases you're working on, give me a call. I get really excited about this product. I think it's a really neat product. Third product we're going to look at real quickly is North American. It's their Income Choice 10. A few differences with this product. You do have to wait 1 year to be able to take income. It does work for both qualified and non-qualified, single and joint. Here's the exciting part about this product. There is no fee. We all have those clients who hate fees, don't want fees, but they still want all the perks of the products with fees. This might be a good product to supplement in there. Minimum on this product is $20,000. Issue ages go from age 40 to 79. If anyone's ever worked with Midland or North American, you know they're a pretty traditional company. A lot of S&P strategies. So they not only have traditional S&P strategies, but they've got some volatility control ones with the S&P as well. The way this product works is we're going to take the initial premium. We're going to give you a 5% benefit-based bonus on the benefit base only. The way their stacking roll-up works, again, remember, this is free, so it's not going to probably look as competitive, but it's got a 2% guaranteed roll-up along with 150% participation. I think this is another picture that everyone should have in their portfolio to show clients when we're explaining accumulation value versus income value. You put $100,000 into this product day one. As you can see, both values have 100,000, but we're going to give you a 5% benefit base bonus. So as you can see, this benefit base is now 105,000, but look, the accumulation account value is still 100. There's so many products. I mean, I think of the Allianz 222. You know how many calls I get a week or a month that, hey, my client says they're getting a 20% bonus. Okay, on their benefit base they are. I can get you a 25 if you really want it. But I mean, there's so much confusion when it comes to the two different values. I always explain the income or benefit based value to people as kind of like a fictitious value. It's just there to help determine an income. As you all know, there's other products where benefit based could be paid out as death benefit. We're not trying to get into that now. I'm just trying to paint the picture of the difference between income value and accumulation value. So again, 5% bonus. So they have 105 and 100,000 over on the accumulation side. In the first year, hypothetically speaking, in this illustration or this example, we earn 3% interest. Okay, well, 3 times 150% is 4.5, plus the 2% that they're going to give us guaranteed. That year, we would have seen a 6.5% increase in our benefit base. So as you can see, 3% interest earned means our account value is now 103,000, but our benefit base is almost 112. If you die, your beneficiary gets 103. If you turn on income, we're going to go off the 111. Those are two things that I think are very not explained quite correctly, let's go with, in the industry. So I think this helps, again, simple thing for clients to understand when you're talking about two different values. For an illustration, I'm going to start off by showing you 0% like I always do. Put 500,000 in. I waited 1 year on this product because we can't take income in the first year. So with the zero interest, they gave you a little bit of a bump here because of the 2% guaranteed roll up. So we're going to hypothetically have an income of guaranteed income of 25,436. We're going to throw in a little bit of interest. Again, I illustrated all these pretty conservatively. North American's product had a little bit better rates at the time. So assuming 4.5-5% return, as you can see, interest credited the first year was 5.41. If you multiply that times 150, you're going to get a number plus the 2% stacking. So as you can see here, we got a pretty nice bump here on the benefit base. Hypothetically speaking, income started at 27,364, and as you can see, every time interest was earned, we saw an increase in our income. This one does continue even once cash value hits 0. You can see that it continues to increase. So again, giving that client the opportunity to have some increasing income for no fee. It's a pretty nice, attractive product. So just a couple products to keep in mind. They do have different payout percentages with North American. They do give you the option. I ran all of these, obviously, with increasing income since that's what we're talking about. But they do have a level option as well. So you can see 2 sets of payout percentages again here. One for level on the left side, increasing income on the other. And then, as you all know, anytime you add a joint annuitant, typically it's going to be anywhere from 50 basis points to a point different depending on company. So it's always important to look at your payout percentages. I know you guys are probably sick of hearing that. I'm going to say one more thing with that, though. A lot of times people call me and they want 10% bonus product with an income rider. It's got to be the best because there's a 10% bonus. You could have the biggest bonus and the biggest roll up and have the worst income if your payout percentages are not there. So it's something you always have to pay attention to because, again, the biggest bonus, the biggest roll up will not always equivalent or equal the best income if these payout percentages are not there. So it's something to always keep in mind. That's why you lean on your back office here at IAMS. Call me anytime. When you guys call me for guaranteed income quotes, first thing I'm doing is I'm going to Annuity Rate Watch. So I can tell you honestly who's going to have the best income and why. Those are things that all the staff here is trained to do. So we can come to you and say, okay, you want to present this and I see why, but let me show you what beats it and why. We want to make sure that you're fully ready going into that house, knowing everything that's out in the industry so you're not losing a sale because you weren't aware. So find that very important here at IAMS. With that, I didn't have any questions. Hopefully you guys all jotted down all your questions. I am going to throw out my last poll question. If you do want information on the products we went over today, just go ahead and answer yes to that. Ashton in my office will then follow it up with an email later today with all the marketing materials, and then I will be following up with each of you individually later on today, first thing tomorrow, to see what additional questions or if there are any cases you're working on. So again, I really appreciate you all taking time out of your day. Hope you have a great Thursday, and we will talk to you soon.